So you're dreaming about buying a house, but you've had a lot of conflicting information from your sister, your brother, hell, your Uncle Ben, who hadn't bought a house in 30 years. Well, today I'm going to debunk some of those things that you've heard and let you know that you may be closer to buying a house than you think. Let's go! Dr. Adrian Gentry, aka Dr. Real Estate Jax. I am a local realtor here in Jacksonville, Florida. If you're new to my channel, please like, subscribe, hit the bell notification. If you've been here before, you know what I'm going to say. Get your own water, your family now. It's my tagline. Hey, I had to say it. Today I wanted to talk about home ownership, buying a home, looking at some of these myths that a lot of people have. And it's really interesting. I talk to so many people and the dialogue is always, well, I thought I had to, or I thought I can do that. And it gets kind of frustrating because there's a lot of information that circulates that truthfully, I don't know where some of it came from. And the other information just may be outdated. So I'm going to give you 10 today, 10 different belief systems or myths that are out there that people have about buying a home, and let you know that if you haven't bought one yet, if it's your dream, you're probably much closer than you think buying a home. So here we go. I'm going to start off on number 10. I'm going to end at number 1. Why? Because I want you to listen to the whole video, and everybody wants to hear number 1. So here we go. Number 10. Buying a foreclosed home is cheaper. While buying a foreclosure home can be cheaper, there are some risks associated with it. Sold as is. A lot of these properties are sold from the bank as is, meaning you go to an auction, you see it, you don't get to inspect the property at all, which I do not agree on, and then you purchase this property. Now, you must have cash or a conventional loan, someone who is giving you money to buy this property as is. It's not necessarily always a great thing, especially if you're a first-time home buyer. Now, purchasing a property as an investor, that's a different thing. What they're going to do is they're going to put money in it. They're going to sell it. However, even banks have gotten smarter. They want to make money too. They realized that the investors were putting money in, and guess what they were doing? Making tons of it. So they started doing the same thing on many of the foreclosures. There could also be outstanding liens on this property, homeowners association fees that haven't been paid, contractors that worked on the property that, guess what? They have a lien on that property that you have to be responsible for. Now, property taxes, however, they're most likely taken care of by the bank. There still could be some that are outstanding. So is this something that I believe a first-time home buyer should get into? No, I really don't. Why? Because it could be too much capital outlay for you, and you may not understand the renovation process, going through all the loopholes to try to get this property ready to live in. So buying a foreclosure is cheaper. I wouldn't say it's a myth, but I can say it could be more costly if you don't understand the process. Number 9, you need 20% down. Now, this goes back to when I said, hell, your Uncle Ben 30 years ago. The criteria was different then. I'm going to be honest with you. And a lot of the programs now don't necessarily need 20% down. And where that came from is the conventional loan that was 20% down. So everybody's target was to save 20%. So if someone's told you you need 20%, guess what? Throw that information in the trash. There are a lot of programs such as FHA that require 3.5% down. And if you qualify for a VA loan, you do not have to put down anything at all. There also is a USDA loan, which is for rural areas. I don't know if you want to stay in a rural area, but you can always go online and look at a map to find out where these homes qualify. I don't know if you want chickens. I don't know. I don't know if you want to see goats, billy goats, as you drive down your street. But a USDA loan has 0 down payments. Now, keep in mind, the more money that you put down is less you'll have to pay monthly, right? It'll lower your monthly payment. And also, you don't have to deal with PMI. We won't talk about that right now, but private mortgage insurance is an additional fee when you do not have at least 20% equity in the property. So, do you need 20% down to buy a house? No, you don't. And let me tell you one more thing. I couldn't leave this out. There are these things called first-time home buyers programs that will give you money towards your down payment. Most of them have absolutely no interest at all, and they taper off as the years go by. Sounds good, doesn't it? Sounds good. We'll talk about that in another video. Number 8, your only upfront cost is your down payment. Now, I see a lot of buyers getting in trouble here, right? Because they say, Adrian, I saved for my down payment. Fantastic. How much money do you have? Okay, well, you might need just a little bit more in most cases. So let me walk you through the process real quick. Once you have found your dream home and your offer has been accepted, you as the buyer have some additional responsibilities as far as fees go. One being the inspection, second being an appraisal, third being closing cost on that property. And they typically range from like 2 to 3%. So let's just say going to the higher end, $200,000 house, $6,000 in closing costs. You also have this thing called an inspection and an appraisal. In Jacksonville market, I always tell my customers 500, even though they can range from 300 to 500 bucks. I want them to have the additional money for just things that may pop up. The appraisal, same price. I tell them $500. Why? Because I want them to have the additional money in case something pops up. So don't just think that the down payment is the only thing that you have to pay once you have your house under contract. What you do have to understand is this. You put a binder down when you put in your offer for that property. That binder goes towards your closing costs. So don't think that the binder is something in addition to the closing costs. That's still your money. That's just binding the agreement that you are going to purchase that property. So if you put $1,000 down on that $6,000 worth of closing costs, we're only down to $5,000 now. So factor that in when you are buying a property. The closing costs, the inspection costs, and the appraisal costs. Number 7. You need a high or perfect credit score. Okay, so this one is touchy with me, right? And I get really frustrated. And the reason I get so frustrated is because I have spoken to so many buyers that believe they're not ready to purchase. However, what they found out was they were ready at that moment or literally a couple of points away from buying a property. This is one of those myths, belief systems, and I would also most say fear. Right? That you need a higher credit score to get into a property and you really haven't talked to a professional. I have a lender right now that qualifies all the way down to 580. It's depending on the lender, guys. So you may qualify for a property right now. Don't even know you qualify for a property. You're fighting to get your credit score up. I talked to a lady 2 weeks ago. She called me. She says, Adrian, I've been working on my credit score. She was actually looking for a rental. I've been working on my credit scores. So I asked her 3 different scores from the credit bureaus. She said, well, the last time I looked up, one was at like 690. Ma'am, what were the other 2? The other one is around 670. I didn't even have to hear the third one. Why? Because, ma'am, you qualify. Like, you qualify for a property right now. And she didn't even realize it. She got excited. She called on one of my lending partners. She put her application in, and now we're working on finding her home. But she has been fighting for the last year and a half, 2 years, to qualify for a property that she already qualified for. I have so many stories like this. It's ridiculous because most people have not been educated on the process. You qualify right now. And with our company, we actually have a program with one of our lenders. We call it Rent to Home. Not Rent to Own, Rent to Home, where we take you through the credit process. We actually look at your credit score, not everyone else's credit score, and we come up with a plan that works for you. No one else, you. And so then we say, hey, this is what you're supposed to do. This is how much you need to pay off. Don't try to go out and pay off all these other bills that you believe you have to. Stop trying to go at it alone. After this program, we typically get people in the house within 6 months to a year. So you don't need perfect credit to get a house. What you need is just a little education. And I promise you, most of y'all qualify are right there, right? Like a couple more points and you're in a house. Don't let fear hold you back. Just get a little bit of information, a little bit of education on your credit so you can actually live your dream. Number 6. You should always go with the lowest payment. Okay. When I first got into real estate, it was actually in a different industry. It was crazy. It was 2006, 2007, and it was mortgages. And I can tell you what, the market was crashing. It was going crazy. People were jumping out of windows. Ah, fire. It was like a scene in a movie. But there was this thing called adjustable rate mortgages. And people were losing their houses left and right. Now, let me help you out real quick. First of all, the adjustable rate mortgage was an excellent program, right? If you understood how to utilize that product, meaning if it was great for an investor who was getting into a property, trying to flip it, needed additional time, but wanted to pay the lowest payment and then get out the property. It was also great for, let's say, a military family who was only going to be at a duty station for, say, 2 years. They knew a definite time when they were going to be out. They can sell the property, get out. What it was not good for was people who were counting their eggs before they hatched. They were looking for the lowest payment. It was an interest-only loan. This is not the scenario I want any of my customers in when they're buying a house. You need to know what your monthly payment is going to be every month, but the lowest payment may not be for you if you don't understand how to use it. I try to make sure that everyone that is a first-time home buyer is in a fixed rate mortgage. Why? Because it provides you stability, and you know in 2-3 years, your rate is not going to rise. So you shouldn't always go for the lowest payment. I want you to speak with your mortgage professional. Let's talk about these things and find out what works for you. Also, you can buy down interest rates. You got a little extra money and you can get a lower payment based off of lower interest rate. Make sense? Number 5, home inspections are mandatory. I want to be clear when I say this. Home inspections are not mandatory, but it is a bad idea not to get one. Say it again. It is a bad idea not to get one. I had to let everyone know that really slowly so it sunk in just a little bit. Simply put, if you buy a car online, you've never met the seller before, the first thing you're going to say is what? It's in excellent condition. What you don't realize is they have the bumper held together with bubble gum. That's what buying a home with no inspection entails. Same thing, right? You don't know what's going on inside of that property. So what the home inspector does is they go on a property and try to uncover every issue that's in this house before you purchase it. When they find it, you can either negotiate with the seller to get a lower price, to get them to pay for it, or it may be something you might just have to walk away from the property all the way. Either way, you must get an inspection. Not getting an inspection is a bad idea. Are they mandatory? No, they're not mandatory. Should you get one? Yes. Yes, and I believe in it wholeheartedly, and I will tell every one of my buyers, get a home inspection, even if it's new construction. Number 4, you can't qualify for a mortgage if you still owe student loans. It's a lie. It's a lie. It's a lie from the depths of hell. You can still qualify. It just goes towards your debt DTI, your debt to income ratio. That is what lenders are looking at to see if you can afford a house and how much your monthly payments will go along with your existing payments, right? So looking at DTI, it used to be 1%. They had to calculate 1% of the total amount that you owed if you were in some sort of income-driven program or you were deferred. So let's just say you owe $100,000. They would have to account for $1,000 a month. And it was hurting a lot of buyers. Why? Because the amount that they would actually qualify for was dropped substantially. So what they did back in July is actually say we only have to utilize half of that, so 0.5%. So now $500 per $100,000 is actually added to your monthly DTI, how much money it is you're spending out on a monthly basis. You have to talk to a mortgage professional. Guys, I'm going to always drive that point home. And the reason why is because a lot of the fears that you have come from lack of information. If that is an issue that you're having. Me, I have $60,000 left to pay on student loans, and I hate it. I hate it with everything in me. But it does help when now it's 0.5 when qualifying for a house instead of 1%. So make sure you get on the phone with someone who knows what they're talking about. Don't listen to your cousin. Don't listen to your mama, your brother, your sister. You can still qualify for a loan if you have student loans. Number 3. Your accepted offer is set in stone. Let me help you out real quick. Once the offer has been accepted and the transaction begins, you do the inspection on the property. Remember, we're saying we're always doing inspections. Remember that. You're always doing inspection on this property. Depending on the findings of that inspection, you as the buyer can negotiate the price of the house. Let me stop that. You as a buyer can talk to your realtor to negotiate price on the house depending on the repairs that are necessary. So let's just say it's $5,000 in repairs. You want the seller to give you money off. Now we can negotiate those $5,000, bringing your ultimate sales price down to $295. On the flip side of that, once your offer is accepted, that does not mean you're going to get into this house if you do certain things. And those certain things, every realtor will lose their mind over. And I have thought about this many of nights of choking out a customer because they have went and bought a new car, or they decided they're going to get Ashley's credit card because they want to furnish their property, furnish their property after they get into this house, or they've already financed the furniture before they moved into the house. Listen, when that offer is accepted, do absolutely nothing. Absolutely nothing. In fact, when you get in a pre-approval letter, do absolutely nothing that revolves around credit. Because at that point, it can either cost you a loan altogether, or whatever you qualified for in the beginning may drop. And I've had customers do this. She bought a car. We were at 300, I think 350, 360. She didn't have to spend all of it, but 350, 360. She went out and bought the car. All of a sudden, 350, 250, 250, $250,000. She was very upset. We ended up finding a house for her, but it was definitely not what she wanted. All based off the fact that she decided to buy a new car. So your accepted offer is not set in stone. You can renegotiate on one side, and the other side, you can hurt yourself. You can hurt yourself bad. Or your realtor can hurt you because you did something that you weren't supposed to do, like finance a car. Do nothing. Do nothing. Number 2, you should base your budget on what your lender approves. You ever heard the term house poor? This is how you become it, right? Your lender approves $350,000. So you aim to spend all $350,000 without considering other factors. When you get a loan approval, it's based off of what they can see on your credit. Let me help you out. That's it. That's what they're looking at, what they can see on your credit. But what it does not account for is other expenses such as gas, groceries, the Netflix bill that you're paying for every month that you must have, that cable to watch Walking Dead, that $250,000 a month, that package for football. They're not accounting for things that are not on your credit. So what I always like to do is talk to the customer to find out how much they can actually afford. Just because you can get a $350,000 house doesn't necessarily mean you need a $350,000 house. And I have spoken with customers time after time who've gotten into bad situation, right? They've bought this house. They thought they could afford this property, and guess what? They can't, because they didn't factor in all the things that they did not tell the lender that they had to pay monthly. A great mortgage lender, a great mortgage professional will talk to you about this, right? That's why I use the people that I use, right? Because they want to find out what's really going on with your finances, not necessarily just what they can see, so they can help you get into a property that you can afford, and you can still maintain a lifestyle that you're not pulling out your hair because you have so many bills but not enough money coming in. So make sure you factor in your budget. It's not necessarily biggest house. It's about getting into a property that you can love, that you have a lifestyle, that you're not working to death to pay for 50, 60, 70 hours a week to impress other people. It's about you. It's about feeling comfortable. It's about being happy, knowing that you own this property. Don't max out your loan approval if you don't have to. And number 1, the one that you stayed for, the one that everybody wants to hear because you were anticipating this moment. If you look long and hard enough, you will find a home that checks every box on your wish list. There's no unicorns. There is no gold at the end of the rainbow. Sorry to tell you. And if you're grown and still believe in the tooth fairy, he's not there. I'm sorry to crush your feelings. But when you're looking for a house, most likely, if you don't have the type of money to buy anything that you want, you're not going to find everything inside of a house. We have to break that down into a must-have list. And you can get about 80% of what you want in a property, but you're not always going to find that hidden gem. You're not always going to find everything that you want. So make sure that you have this list when you're looking at properties. While it's important to find that bedroom that's much larger than the one you've been renting. While it's important to have 2 sinks because your wife takes it all up with hair products, you can't have everything in one home. And let me help you out real quick. If you're a first-time home buyer, sometimes there's a thing called a starter home. And that's what our parents looked at. They looked at starter homes, right? To start them on the process to getting what they really wanted. So make sure it's comfortable for you and your family. Make sure you're getting about 70 to 80% of everything that you're looking for. But don't look for the she shed. Don't look for the tree so you can hang the swing. Don't look for everything in one house, because let me help you out real quick. You're going to get frustrated. You're going to get mad. And you are going to probably stop the process or start second guessing yourself and believing, is this really my time? Should I be doing it right now? Really think about what your deal breakers are. Like one of my deal breakers, I love a backyard. I have to have a backyard. I like a fenced in backyard because I don't like the notion of people walking through my backyard. This is my bubble. This is where I feel safe. So I have to have certain things to make me feel safe in my home. I also like a kitchen. Why? I love to cook. So that may be something that I need, and it's a deal breaker if it does not have a great kitchen. Or I can upgrade it. But if it's not there initially, it's probably something I'm going to pass over. So you have to write that list down for yourself. You will look long and hard for that goal at the end of the rainbow, but you will never find the goal at the end of the rainbow. So understand, this is a first purchase. This is not your forever home, right? This is not the home you may be in 10 years from now. This is your right now home. Start to build equity, start to establish the home and your family, and then guess what? You go get something else after you've lived there for a couple of years. So I hope you love this video, right? I just want to give you some information, and I tell you that pretty much every video. I'm trying to give you information to educate yourself on the process. I understand that a lot of people do not truly understand the workings, the inner works of real estate and mortgages, and they've been fed so much information, and I promise you I battle with a lot of myths coming from people who don't know what they're talking about. Or my grandma said. I've heard so many people say, well, my cousin said, well, my mama said, and it does not necessarily mean that's the same predicament that you're in. Doesn't mean that that information wasn't correct 15 years ago, 20 years ago. This industry is ever changing, meaning the information from just last year, the qualifications inside of Corona, when that happened, are completely different than they are in 2021. It's different. So sit down, talk to a mortgage professional. If you want to talk to a realtor in the Florida area, shoot me an email, shoot me a call. Like, pick up the phone. I'm here to talk. If you're somewhere else, put it in the comments. Shoot me an email. My information is in the description. But get the correct information, because I want to see people own homes. I want to see you reach your dreams. I say choose excellence at the end of every one of my videos for just that reason, because I want people to choose excellence. I want people to live their dreams. So that's it. That's all. Until next time, be great. Choose excellence at everything you do.